Accounting for Climate Change with St Barbara Limited. My accountants, your sustainability experts, naturally adding value to your business. Based in Hobart, we are dedicated to helping businesses achieve maximum success and truly standing out in competitive markets. We accomplish this through the development and engagement of sustainability recognition and reporting. Sustainability is an important factor for businesses and will become a key area for reporting in the future. For Australian businesses, the impact of climate change is a major sustainability concern. In general, it will affect the planning and day-to-day operations of businesses, government agencies, and other organisations. But what is climate change and the risks for businesses in general? Climate change refers to significant changes in global temperature, precipitation, wind pattern, and other measures of climate that occur over several decades or longer. For example, Australia is becoming hotter and will experience more extreme heat and longer fire seasons because of climate change. Recent climate events such as extremely high temperatures, unprecedented bushfires, and widespread drought have focused government and public attention on climate change in Australia. Climate change is an important factor for mining companies in particular. Climate-related risks include those from potential acute or chronic natural disasters and changes in climate patterns. Climate-related risks to businesses can include risks to related technology and markets, changes in legislation and government policies, data breaches and cybersecurity risks, and broader technological or regulatory risks. For businesses, these may lead to potential financial implications arising from climate-related and other emerging risks, such as asset impairment, the changes in useful life or fair valuation of assets, the potential provisions and contingent liabilities arising from fines and penalties, changes in expected credit losses for loans and other financial assets, and increased costs or reduced demand for products and services, leading to impairment calculations being affected or requiring recognition of provision for onerous contracts. Some of the challenges for mining companies will include interruption to mine infrastructure and operations, such as natural hazards, changes in trends of weather patterns and increasing sea levels, the impact of water source limitation for mining, processing and refining activities, which will increase the cost for pre-use and post-use water treatments, extreme weather events raising the need for electricity to cool groundwater mines and surface facilities, changing access to supply chains and distribution routes due to increasing temperatures or rising sea levels, and challenges to worker health and safety conditions, including the impact to recruiting, hiring, protection, and efficiency of employees. Obtaining and retaining a special operation licence could grow more challenging in areas where climate change exacerbates structural problems and raises direct rivalry for services between business and society. Enhanced physical and non-physical threats would make it impossible to access project funding. Additionally, a changing climate may have the potential to influence the mining industry's future. It can undermine investor confidence in mining activities that are planned in regions likely to face extreme climatic events. While there is very little guidance and recommendation for sustainability reporting, there is some from key regulatory bodies and the major accounting firms. When it comes to implementing guidance, the AASB and the CPA acknowledge that the Global Reporting Initiative's Sustainability Reporting Guidelines are a key framework and provide a minimum standard for sustainability reporting. The AASB has also released their own publications with guidelines for sustainability reporting. The keys to take away from this are that businesses should assess the materiality of climate-related risks, arrive at correct fair value judgments, and reflect these in their financial statements. Additionally, it is encouraged that these should be included as disclosures in the notes to the financial reports. This is in order to provide accurate and reliable information for stakeholders, which may help avoid legal disputes in the future. The ASX maintains that a sustainability report should be the absolute minimum requirement for a company to show it is committed to policies that care for its communities, people, and the planet. In general, the Big Four have advised that entities always consider and disclose climate risks through identifying metrics, setting targets, disclosing the entity's results against those targets, using appropriate reputable standards, and having regular external audits and appropriate risk management frameworks and controls in place. Specifically, Deloitte suggests scenario testing against a variety of outcomes to see how it may impact entities and applying the TCFD standards. They also have an 8-step suggested planning for good sustainability reporting. KPMG advised that adopting integrated reporting helps organisations to produce more meaningful reporting about not only past performance but also their strategies to create value into the future, and that a key factor that must be considered in integrated reporting is the ASX Corporate Governance Principle 4. Ernst & Young have agreed with Nathan Parkin and Matt Nakad from the ASX, stating that many investors have shown an increasing desire to factor climate change into their investments. But despite the efforts of governments and regulators, particularly the FSB's Task Force on Climate-Related Financial Disclosure, it remains to be seen how a global consensus on climate-related disclosure might emerge due to the challenge of poor availability of consistent, reliable and detailed climate change data. PricewaterhouseCoopers has been at the forefront of advocating the use of sustainability reporting. Their reasoning is that the Prudential Standard CPS 220 risk management sets a framework for identifying, measuring, evaluating, monitoring, reporting and controlling or mitigating material risks of APRA-regulated institutions. The standard contains several requirements that, at a minimum, will need additional consideration of climate risk from regulated institutions. They have also emphasised that traditional financial risk assessments are unable to assess business-wide exposure to risks from climate change, and that businesses therefore need to consider their total exposure to different sectors in different locations and jurisdictions. Taking the recommendations and guidance into account and comparing them to the sustainability reports of an industry leader such as Rio Tinto, we can see emerging trends of what makes a good sustainability report. These trends include voluntarily aligning with reputable bodies such as the Paris Agreement objectives or the United Nations Sustainable Development Goals, using the standards to set internal short and long-term targets and to enable a measurable accountability for stakeholders, to provide transparency and disclosure as per the TCFD standards, acknowledging materiality in notes to financial statements, regardless of the financial impact. Rio Tinto even separates these disclosures into physical and financial categories, and the use of scenarios as risk management plans to increase resilience. Additionally, Rio Tinto is a company that ensures all new investments are measured against their current sustainability targets and risks. Our commitment to St Barbara Limited. While St Barbara's sustainability reports disclose both climate change and changes to sustainability legislation as materiality risks, that was the extent of your disclosure. Moreover, despite acknowledging the risk of legislative change, you have not implemented any contingencies or provisions to minimise these risks. Our team of experts at My Accountants would love the opportunity to work together and bring St Barbara Limited to the forefront of sustainability reporting, along with other leading mining companies, through the development of reputable sustainability targets, reporting metrics, and risk management scenarios. My Accountants, your sustainability experts, naturally adding